The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, on a day where if you're a bull, all you got to do is wait about 10 minutes, or if you're a bear, all you have to do is wait about 10 minutes, and you'll be right. And, of course, then you'll be wrong the next 10 minutes. And it's one of those markets where you go and you close above what should be resistance, and the next day you get smacked back down. 14 points off the S&P cash. Volume is light, though, 1.64 billion shares on the consolidated New York Stock Exchange tape. That would suggest that we're probably going to at least get a attempt to retest yesterday's highs. Those came in at about, 2014 on the S&P cash. I suspect what we're going to see is a kind of a gap up or a move up on Monday and Tuesday into Wednesday's FOMC meeting at 2 o'clock for their announcements. It looks to me like the market wants to stare down the Fed and say, okay, if you're not scared of us now, you will be. Just make one wrong step. Just flinch a little bit and we'll draw. I kind of hate that. Well, there's not enough movies where the cowboys are in it anymore and they go, draw. It's a lot more realistic these days. There's not a lot of that chivalry. A lot of shooting in the back, which is probably the way it truly was back in the good old days. But I do wander away from my chosen course of speech. In the same time, we've got probably more interesting to most retail traders that don't spend a lot of time looking at the news will be that we are closing under 18,000 on the Dow this weekend, and that'll be the headline or the discussion on the way home from work for most folks. I do have to say that just about everybody I know is on vacation, and I don't know if it's just down here. A lot of people I know up north all on vacation too. I don't know if it was just the horrible winter, but certainly it looks like a lot of people are on vacation. Saw some discussions over the last few days with market pundits, but mostly these were reporters, and they were all trying to get anybody to acknowledge or make a comment on anything. And apparently the chieftains have not come back from the Hamptons. There was like several reporters, and they were all talking, and they're going, yeah, every time I want to call somebody and ask them for comment, the secretary goes, hang on, he's still on vacation, and we'll ring his house in the Hamptons, and you hear this ringing, and then an assistant comes up and says, yes, he'd be able to speak to you now. So could this be just one big extended long vacation for the summer? Thinking that maybe there isn't a lot to be had, and they've left everybody back at the station to cover for them in a market that just goes sideways forever? I don't think so. I do think that they're going to hang out there as long as they can. There is some other things going on, and that is M&A. The thought is that interest rates are going up. And now that they started ticking up, and especially the last few days in the 10-year signals that the window for doing M&A on a lot of these big companies, maybe it's all about trying to get these deals done before the end of the summer. Part of what happened yesterday may be blamed on some new IPOs that were coming out in the last day or so. But it's kind of tough to see. I think a lot more of it had to do with options expiration. And I'm still thinking they're going to try to push this market up a little before we get into the Wednesday market. But I could see that we could be at 1230 on the S&P cash or 1235. That wouldn't be that much higher. And maybe it takes a couple of days. Maybe it takes all 3 days to get back in there. What I would like is to get up there and then have the Fed finally come out with something that isn't a lot of gibberish about maybe we won't, maybe we will, maybe we don't. The data's in. There's no sitting on the fence anymore. And I think that's why we've already seen, especially the 10-year yield go through, basically up to 2.5. It came off a little bit. I think that the Fed, the Treasury, and all the world bankers are constantly monkeying with this market. And, of course, probably why we're seeing such wide swings out here. I don't think it's everybody waiting on the Fed. It's just too big a hand. One of the best books on Wall Street is called Against the Gods. If you haven't read it, you probably should. It's the story of risk throughout throughout history. And I have to say it is one of the best books. Long before I was a contributor to TFNN, I'd been talking to Tom O'Brien. I gave him the book, and he read it. And he thought he was blown away with it. He actually got the author on, but the author sounded like he was about 95 years old and out of it already. I'd be very surprised to find out that he's still alive. But an excellent book. The author, I think he'd written it 10 years before. And he was an academic. He didn't quite cotton to the stylings of Tom O'Brien. It was one of the more funnier interviews out there for someone that is kind of an in-the-trenches kind of guy to somebody in the lofty ivory towers of academia. There was certainly a kind of an oil and water to the interview from Tom O'Brien and him, but that's why I remember it so much. I probably would have forgotten it if it wasn't so much the guy from Paper Chase, the professor from Paper Chase, going after somebody that basically came off the College of Hard Knocks. And that's probably the dichotomy that was so interesting. But what I saw in that book is extremely interesting. But the idea that there's a invisible hand moving the markets around runs through that book quite nicely. And it is interesting. Mr. Hart, is that his name? It was kind of call your mother. Anyway, it is interesting. But I do digress.
That it's all just a little bit of history repeating.
On this day, one of the most important speeches of the Cold War is made, if not the most important. Probably, I could say that the calling them an evil empire was probably more important. More than that, it made all the bedwetters and crybabies that think that we should have laid down to the Soviets cry and moan, which was no end of fun for me. So maybe this one's my second favorite one. But he went in front of the Brandenburg Gates. I've been there many times. Just really kind of interesting to see the kind of history that's over in Europe. If you haven't been over there, I recommend it highly, at least once. I've been there enough times that I don't need to go back. But I did think it was incredibly interesting. But this is a little snippet of the speech.
Mr. Gorbachev, tear down this wall.
And some think that this was the point where a lot of the dissidents in Russia took it as the green light to go ahead and start pushing. And it never stopped. The gate fell down. Unfortunately, we decided to drop the ball, let me put it that way. We had a new regime come in mid-90s, and they didn't want to push the advantage. They just didn't think it was right, or it was unseemly for us to do a victory lap. Now we've got Mr. Putin because of it. We had the opportunity to really probably do right and backed away from it. And now we once again are paying the price. We did it right pretty much in Germany. We did it right in Japan. Left the place kind of like the Boy Scouts. Left it better than when we got there. And I think that's all you can ask of a dominant world power like us, is to do that. But it's the pattern of running away from a win seems to be something that we have gained an appetite from and to lately. But I digress. Twitter, very interesting moves in Twitter out here today. And to me, if you've watched it, it was up about 8 or 9%, 7% for most of the time last night. But the pundits of Wall Street, the street guys, could not throw themselves at the cameras of CNBC any faster than they did to rain on Twitter's parade. The reason why, I think, was a ton of these guys, it has a very high short interest. And they didn't like not getting the heads up out here on Twitter. And they didn't have time to cover their shorts. So these guys are coming out and throwing rotten eggs at Twitter today, left and right, faster than you can think. All they wanted was a different CEO. They got one. They don't like that. And the reason probably is that there are a ton of them are short Twitter. And they didn't like not getting that heads up, not getting the wink and a nod. Same to a blind man. I always remember that Monty Python bit. But so we continue on that. But anyway, to me, I think we're listening far too much to our spouse's divorce attorney about what we should do. Kind of like if you're a Republican listening to a Democrat telling you how to run your campaign, or the opposite, Democrat listening to a Republican. I think you got to consider the source out here, and that they're crying and tearing their clothes way too much just makes me think that they probably hate Twitter just a little bit more for not giving it a heads up. I suspect the people at Twitter are more than willing to extend the middle finger to these folks, since they've been almost vicious about trying to get Twitter to get moving. And I have a feeling that a lot of these guys are just ignoring what Wall Street has to say. And finally, they got fed up with it and said, okay, I don't want to hear any more about it. We don't have another CEO. We could have, but you guys just wouldn't shut up. So we're going to do it, and we're not going to tell you about it. And I think that's exactly what's going on. They feel like that they didn't get their pound of flesh exactly the way they wanted, medium rare. And maybe it was medium, and therefore they're going to throw more mud pies at Twitter. It's a pretty good product, and it does fairly well. We're going to be talking about in the next hour about what they're changing, which I think is probably long overdue, in the Tech Insider portion of the TFNN afternoon. In the meantime, 2094.40 on the S&P cash.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
After the, not after the bell, after the afternoon, I'm just say it in the afternoon. I guess maybe that's probably about an hour ago. The trade bill that everybody's been arguing all week looks like it has failed, probably will not come back up, to give fast-track authority to the president. And it was kind of interesting to see just how many different people were coming into this. Probably a good thing that it was defeated, not the bill itself, but the way it was being done. They could not, if you can't show something out in public, and it's not because it's double top secret, probably some horrible things in it. And from everybody talking about it, it sounded like this was a porculus bill with everything shoved in it, and maybe why it ended up failing. Some of these things end up looking like Christmas trees with ornaments hung all over them to please everyone. Did not make it. But to me, the more interesting thing is, of course, just the political ramifications. It had more subplots going on than a whole season of Game of Thrones. But the question is, now will we be able to see what they voted down, or are they going to go out there and burn it before anybody could see it? I'd like to see it, see what's in it. But that's just me. It didn't seem to even roil or move the markets at all. So I'm wondering if it really did matter at all. You would think that if it was really this big a deal, we would have seen probably some kind of impact if If it wasn't, maybe the opposite. But market's pretty much saying big yawner on this one. So maybe it's not what it was built up to be, or maybe it was worse than it was be. But I guess until we see it, we will never know. Yes, it's on double secret probation. The IMS, of course, said that, of course, no progress is being made. Everybody's saying that this is the reason for the pullback today. And I'm not quite sure, because we knew this yesterday. I brought it up on the show that that everybody knew about it yesterday when the IMF brought it up. Well, Greece is the word. At least that's what everybody's blaming it on. To me, I don't think it had a whole lot to do with anything in Greece. It looked to me more like a lot of manipulation, especially cash keeps sloshing around to where they think it's going to make money in the next week. Today, it was a lot of that money sloshing over in the Asian markets. They were up, especially the China markets, fairly decently. They had a little pullback. This was it. They're kind of back to where they were. We made a little tiny bit of money, maybe a little more than a little tiny bit, in being short the Asian markets. We got out, and I'm glad, because they basically came back to our entry point today. It comes back to me that maybe, especially the last couple of weeks, maybe we're looking at the beginnings of the cracks in the foundation of all these central bankers, and maybe starting to see that individually these people are starting to have some arguments, because the movement really doesn't make a lot. It's not correlated. You would think that if a lot of these things were moving, we'd see gold move. And last I looked, it was stuck at 1180 in a big snoozer, which has actually got me actually interested in it. I'm starting to think that maybe there may be something in gold here just from the lack of action. Normally, you get about 5 or 10 more days of this thing going at 1180. And I know a lot of people are thinking, oh, boy, could I do another 7 or 10 days of this thing, trading days going sideways? But that's kind of, I've been waiting for some kind of signal at all. And at least we're starting to get the lack of interest and the lack of movement in the commodity, which is something. Either I was looking for a huge blowout to the downside, or a total lack of interest from all sides, and a total lack of movement. And this finally has me thinking that maybe there would be something out here if we could continue this total lack and apathy for movement. And this thing could just hang around 1180, 1170. If we could just see very, very narrow trading ranges for the next 5-10 days, if we had a break to the top from that, that may be the final signal that maybe something's happening in gold. To me, seeing silver down, 0.5% or more today, it was, last I looked, 1580 or so, continues to say that the industrial uses of silver are weak, but could major changes in the way that the markets are moving get people to go buy gold as a currency back again? And we'll see. I'm looking for that almost lack of a heartbeat in any gold trading to maybe move things along. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we've got a lot of stuff going on here, so why don't we try to get into it first? Again, I guess one of the things that has been most interesting to me out here is the reaction to a test which had higher volume yesterday of the IBB. It did get in. It did go above the previous high of April 23rd on the IBB, and it did so with convincing volume, but came back in. What is pretty much universal in a lot of these patterns out here is the total lack of energy back up from these lows. Now, you can make a case that the IBB tested its previous low on lighter volume, but you know, you've got maybe what's setting up as a trading range finally in the IBB, and you know, maybe later it comes back up and tries to test the March 20th high at 374.97. Doesn't have to right away. You've got two gaps underneath it. But if this was all hugely bullish out here, I would suspect, especially with the volume yesterday, that we probably should have come through and busted through this today. Again, we've got an incredibly choppy market for trading. But interestingly to see just how many of these stocks out here, how they're reacting to highs. Boyd Gaming, the gaming sector has been rather weak over the last 6 months or a year. I suspect that eventually we're going to get online gaming that we have the Speaker of the House from the previous majority leader leaving might open this up. He was rather caustic, and I think a lot of people would have rather burned down the Congress than give him any kind of win for his native state of Nevada. But you've got pretty light volume up here, at least in Boyd Gaming. BYD, March 9th, 3.7 million shares. Got into it with 824,000 shares yesterday. We've got 425,000 today. Doesn't look like it's going to be able to break through that 1507 high, which I thought was interesting. The other thing, or another one out here that looks very interesting to me, is Chipotle. Chipotle, however you pronounce it. I always get flack from one of our engineers for pronouncing it. I've never been there, and to tell you the truth, I'm not a big fan of Mexican food. Oh, he says I got it right today. But it is one of these stocks that should probably be bouncing out here. It has come back to its big time bounce up level where it gapped up on the 22nd of June of 2014. So we're out here, what, or actually, that's July of 22. So we're almost a year into this big gap up. 2.2 million shares that day. We're in here to less than half. Do you get a little bit more test? I think the answer is yes. If you wanted to be bullish on Chipotle, I guess that $600 level would be it. Now, before you did that, I would probably be looking to Andy Heck and maybe even call Andy and ask him whether or not he thinks that any of these issues with food are going to change. From chicken to beef, to genetically modified foods, to everything else in the world, everything seems to be conspiring against Chipotle. You know, you do got a little bounce. You don't have a lot of volume out here, but that's not all bad. I would be watching this for the next few days to see if there's any interest out here. It certainly doesn't look like it's a time to be buying this. It certainly looks like if you were short and you make $100 off this thing, that would be it. That would be different. What else can you say? Federal Express coming out with a huge write-off today on pension funds. I just saw that. But it had tested the previous high yesterday, the December 8th, 2014 high at 183.41. You had 3.4 million shares on that. This thing only had 1.9 million shares, which is a great deal of these stocks up here at highs are not getting any love or any volume or any sign of strength on these breakouts right back into the trading range today. And you would have to think that crude at 60 had to be a lot better. By the way, crude at 60. I didn't know exactly where it closed, but it spent most of the day under 60. I think it closed at 60.25 maybe, but you never know. Anyway, another one of these that looks like a very long pattern, and what you really have to wonder about is this March 26th low at 163 up to this high of yesterday. Didn't have any energy at all except for one day, and that was a gap up on April 7th. That closed lower than it was higher and didn't really follow through. You had that gap up. I think that was the earnings date on 5.4 million shares, and that's been the last real day that you had any kind of energy in the stock. It's done nothing but meander its way back up here and pull back into the trading range. This would suggest that you've got a fairly nice trading range. It did come down and test the December 17th low that had 8.7 million shares with 1.7 and gave you a very valid buy signal. But now the same thing at the top. We've got no volume at the top, no volume at the bottom. What does that signal? A big trading range. You'd need something, I think, significantly to change out here in FDX to come out. We talked about Fold yesterday. This thing up at the high actually does have some volume today. Didn't have a lot yesterday when it was coming up here. But you got a nice little gap up here. You're going to be short on volume. You needed 21 million shares from the March 19th high at, $13.20. This did gap up today. And maybe there's a little bit more love still in some of these bio stocks that's out there. GLF, which is Gulfmark, wanted to see if any of these stocks were giving any signals yet in the energy patch. They certainly have light volume. They certainly haven't given me any signal that says it's time to go belly up to the bar on these either. In the meantime, you can give me a call at 877-927-6648, 877-927-6648. And again, light volume out here for Gulfmark. So a few of these stocks that are out here we've been talking about in the energy patch, very light volume at these lows. We've been following GW Pharmaceuticals, the marijuana-based pharmaceutical company, the only one legally able to go and do that kind of research. Did double top out here with light volume. One of the things that interests me most was that this was one of Kramer's that he whipped incredibly hard. And I think there are a lot of retail traders in this one that could have a huge movement in it, especially if you're watching it as a day trader. You may want to watch this. One of the reasons why I say that is some of the other stocks that Kramer whipped up to unbelievable levels, like Carbo Ceramics, CRR. This thing was July 1st, just about a year ago, was 155 bucks. And it's trading around, what, $47, a little less these days. Now, maybe we get another market that comes back in. I don't think Carbo Ceramics is ever getting back up to those lofty levels again. One of the problems came to be that they figured out that they could use, instead of these ceramic pellets that Carbo Ceramic made, they could use standard sand if they got a special grade of it that was much cheaper. But even then, the train companies, of course, the railroad stocks have been under huge pressure because they're not doing near as much of this as they did before. The sand is injected into these wells to keep the rivulets open and let the oil seep on through. But you know, this has been worse. I think you probably want to see a test of $27.97 in this, which is the high volume low spike of January 29th. But there may be some trading in this thing. It may have to go sideways longer than 6 months to put a base in, but you might have a nice trader in this thing. At 27 or 28 bucks, it's 47 now. You know, does it double? It could. My guess, though, is we're probably looking for some kind of pullback yet again. And then if crude would take back off above maybe 60 bucks long term, maybe you'd want to look at this again. They still have business. There's some wells that you actually need their product with. What else do we have? Another one that's come back to its takeoff area, and you want to look at if you were thinking about pharmaceuticals or biotechs, is Infinity Pharmaceuticals. INFI is the symbol on this guy. It popped up on September 3rd of 2014 with almost 18 million shares. It's finally come back in this thing with incredibly light volume. So there are a few stocks out here that are making some buy signals. This certainly was what you would be looking for out here if this thing would base out for a while and then start moving back up. So there are some stocks out here that are interesting. Another one out here that looks like awful light volume at the high, Prothena Corporation, PRTA, had a huge spike to $45 on March 20th. 6.6 million shares. Got into it with 500,000 shares on the 5th, and it's just been kind of going sideways out here for a while. A lot of energy off this last major low back up to this high, so I'm not expecting the wheels to fall off the wagon on this. But could you get back down to this first gap, which is at about 35 bucks? I think the answer is yeah, you could. That would probably be the safe area to maybe make a play in this. This thing may be in a trading range of about 10 bucks, which wouldn't be bad. It'd be a 33% trading range on the stock. STJ, St. Jude Medical, another one out here testing its highs on half volume. Did that yesterday. TJ came on April 23rd, $75.73. 4.7 million shares got into it with basically half that yesterday, 2.5 million shares. It's pulled back into this trading range. It did have a huge sign of strength on the 22nd of April, and what you would hope for, it's already tested it once, and maybe you don't get another chance out here. That would have probably been the buy signal April 30th with 2.1 million shares, but it's come back up. Maybe it's just at a bigger trading range too. I don't think I would probably play it, but maybe if you got back down to around that $70 level again on light volume, you might have an opportunity for this thing to go retest that high and then break out if we have any kind of market bullishness. In the meantime, you can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. Okay, the Tech Insider newsletter is out. Oh, can you smell the freshness? Oh, it's fresh. Just out at 2:22 today. Okay, other things we've got going on out here. I wanted to look at some of the other stocks from my scans earlier this week. We were talking about some of these testing highs. Gilead was one of these. This one kind of looks, again, like it tried to break out over the last couple of days. Yesterday, or the day before, we had 11 or 12 million shares going up against 22 million shares. Yesterday, 14 million shares. Given about half of that back out here today, what you would really be watching is this, if Gilead closes at any time next couple of days back below the 116.83, that could signal that we've got at least a temporary top in some of these pharma stocks. Taser, we brought that up. This one on a little shorter time frame looked like it had spiked out here yesterday. I think that we brought that up yesterday, and back in the trading range here today. These stocks like Taser tend to have a personality, and that personality is a ton of business and then none. Dollar General, we talked about this one also this week. When I look at this one, I look at the 5.4 million shares of April 27th at $76.99. We went through that yesterday with 2.8 million shares, 1.4 million shares today. Look for this to pull back in to the trading range fairly quickly. Trying to think if there was any other stocks. That, LNC is another one. Lincoln National, we brought this one up this week. Another one that broke above previous highs, kind of pulling back into the trading range once again. March 6, $60.84, 4.4 million shares, 2.5 million shares. My guess is it's headed back to this gap between 58 and 59 bucks. Miller, Magnum Resources, again, a lot of these stocks with fairly light volume in the energy sector getting hammered. This one just doesn't look like it's going to stop, but certainly not a lot of volume. This thing, we've been looking for something like an 11 million share day since January 22nd. Got into it, bounced on 4.7 million shares on the 21st, and it's back underneath that level, and volume has been pretty much even at about 5 million shares the last 3 days. But nothing like the 11 million shares we saw on January 22nd as it's busted back down. Again, I wouldn't be buying this unless you saw some kind of drastic change in crude, but this one could be a huge percentage gainer if we did see some kind of interruption or shooting in the Gulf or something else. Some of these stocks out here that are basically being bet that they're going bankrupt may have some huge moves as they are heavily, or most of them are heavily shorted. In the meantime, give me a call, 877-927-6648. Post a message in the den and or email me at path@tfnn.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And people are talking about the paper chase in the den, and all I can remember is the old professor pushing out the broker ads out there. I can't even remember who it's from now. All I remember is the SNL parody of it. We make money the old-fashioned way. We steal it. And always was good. What else is going on out here? Markets looking a little weak as we go into the close out here. 2093 on the S&P cash, 1.8586 billion shares. Again, fairly light, so a typical Friday. Again, we've got the FOMC meeting announcement at 2 o'clock on Wednesday. As we go into that, expect volume to probably be light starting Tuesday afternoon. It is an options expiration week also for next Friday. So I think we're going to have a lot of action, probably going to be a lot better for traders than it is for people that have an intermediate middle range move. But, we could still see some decent action out here. I suspect, or at least what I'm looking at is probably some options into expiration and buying them maybe on Wednesday or Thursday morning. I think we're going to, after all the volatility comes out of a lot of these, there's going to be an opportunity to buy some cheap options, I think, this month. Been trying to get them the last couple of months, never really have bought anything. Nothing really shown up. But there's just so much instability in the market right now that the options sound rather interesting. Other stocks of interest, let's just look at Twitter real quick, TWTR. And, we've talked about this pattern a great deal, which is that you can't or you haven't been able to make a lower lows and or higher highs. You just keep getting in a more narrow trading range. And basically, if you look at the longer term on Twitter, that's exactly what we're getting. It would need to go break $34.62. But I don't know. It just, the more that people yell and scream how horrible a stock this is, the more I think that maybe they protest just too much. But could they rain on it and tell everybody how horrible it is yet again on Monday and get it down to 34.62? I think maybe they can. Certainly a lot of volume in the stock today, but a lot more going on. Let's go back and look at a few more days later. Wanted to see how some of these stocks did work out. We've been talking about the WE this week. We were talking about how it at least got into its big spike day of April 30th at $15.44, 2.3 million shares with no volume. Basically, you had 400,000 shares, 500,000 shares on the spike, right back down into that range. So a lot of these stocks heavily range bound on previous highs. Let's see if there was anything else I wanted to see. Easy Corp, wanted to see how some of these stocks that had broken below its previous lows, maybe, you're getting kind of a washout in a few of these. Easy Corp is one that I'm looking at. EZPW is the symbol on it. Had a huge spike down to $7.68 on May 1st. And we went sideways on this one. Never really got a ton of volume. We had sideways volume, basically, and a lot of it on the 27th. But since then, volume has kind of deteriorated. A little better volume today. This thing spiked down. What you would be looking for is a close back into the $7.68 range to confirm a bottom. But certainly not a lot of interest in throwing the baby out with the bathwater on this one at the moment. Well, hang on. I'll be back next hour. We'll be talking technology in the Tom O'Brien Hour. So hang on for that. In the meantime, sell when you can, not when you have to. And we'll see you, same bat channel, channel 14 on Tiger TV on Monday.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.